And now for something completely different.
It's a rich man's world.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning, everybody. Welcome to Financial Fitness Friday. I finally feel at home. I don't like this during the week stuff, but now with my Danny, it's all good. Back to our Financial Fitness Friday. Because
all is right in the world.
It's like the planets are aligned. It's really good. So you saw the, what was it? You really get to see now all the galaxies. What was that? That big thing this week with the telescope? I don't know. I can't remember. Yeah. Well, it's like, oh my gosh, look at all the galaxies out there, right? Then they got this meme where it's really like a Formica top of it in the kitchen.
Well, the best part is where they show somebody on a security camera and they can't see anything, but yet you can see something, so many millions of miles away so clearly.
What's going on here? And all the conspiracy theorists are out. I know what that is. That's my backsplash in my bathroom. How dare you?
Oh, man. Good stuff.
Good stuff. I've also got a really good tip for you, Danny. You want to get people off the phone sooner?
How do you do that?
You start acting like Floyd from the Andy Griffith Show. I did it last night. It worked.
Yeah.
So I had this guy on the phone. He kept going on, and I went, ooh, oh, interesting. Yeah. Ooh, cool. Oh, what, oh. And what? I got to go. Yep. So
great. Me too.
So keep doing that, and it'll work. Oh, yeah, I never thought of that. Oh. It works. I'm telling you.
You have become the old man that picks up the calls and knowing it's spam.
Oh,
you're like, you know what? I got nothing else to do. We're going to screw these people.
Those are the best. Brent actually does the best. He tortures spammers really well.
Oh, Brent does a really good job.
He's a master of torturing spammers.
They call me up. I say hello. And they go, like the first phrase of the pitch. And I, excuse me, did you have an appointment to make this phone call? No. Well, you're going to have to go to my secure website and make an appointment to talk to me if you want to talk to me about this. And by that time, they're gone.
Now, Brent is going to start using Floyd, though. It's going to work.
I think each week you should document what you try.
And then we could publish it.
Yeah, that's right.
I don't know.
It's your next book.
My next book.
The Telemarketer's
Handbook.
Handbook.
When we were
audiobook.
You didn't have this when you were a kid, but when we were kids, prank calls were big.
Oh, yeah.
Oh, I had it when we were kids. You kidding me?
Yeah,
Nobody had
people?
caller ID.
Oh, okay.
You keep Prince Albert in a can?
I used to call this poor old woman like, I'm calling from WNVC, and you have won a trip to the Bahamas. If you can answer this question, where is your husband? He's dead. Oh, okay, well, who will be going with you on this trip? Oh, and you just keep them going and go. Yeah. It's terrible. We were ruthless as children.
Yeah, I don't know if we ever went that far. It's more along the lines of like, is your refrigerator running?
Oh, yeah, but more people caught on to that.
Yeah.
So it's a
Over
little
time.
bit different.
You ruined it for everybody.
Sort of did. Hey, so listen, we are, bank earnings. Wells Fargo came out, and they're also following the Jamie Dimon line of setting aside funds for bad loans. This is pretty unique, Danny, when banks are actually being proactive in battening down the hatches as opposed to being in the storm and then we have to bail them out. Jamie Dimon is putting the money, he's walking the talk, and he's doing the same thing. I think it makes absolute sense for banks to look to do this, but Wells Fargo has done the same. Company shares are down 3%. This morning. United Health Group had a pretty good report. So listen, it's absolutely an earnings recession because when you look at the producer price index and you see the pricing pressure and you have to wonder how companies are going to pass it on to distressed consumers, there's going to be some amount of, we're going to have to eat this, guys. And how is that going to manifest itself, whether it's through layoffs, shrinkflation, however creative way you're going to get, because obviously this inflation hasn't peaked yet, and we don't know what's going to cause it to do so. And even if it does peak, how long is it going to take? It's like being stuck at the top of a roller coaster, Danny, and then you don't come down quickly. You sort of come down real slow. So how long does it take to get to that magical Fed nebulous target of 2%. If that's first of all, I don't even think that's realistic anymore. That's why we went ahead and raised our baseline in our financial plans a couple of years ago. And you know what I'm worried about is what do we need to do for the new year, Danny, as we look at inflation? Do we have to raise our inflation foundational benchmark higher than it is right now? And that's something we have to do. We study the Atlanta Fed, sticky CPI. I had Mike on yesterday. We talked about how the sticky price index of the Atlanta Fed, and if you haven't checked out the Atlanta Fed for inflation results and studies, you should. It is one of the best.
Yeah, the Atlanta Fed puts out a lot of really good information.
They really do.
To your point, I think there are going to have to be adjustments made. We're going to have to look at inflation, capital market assumptions. I mean, all of these things are going to have to be adjusted. And that's one of the things within a plan that needs to be extremely nimble. And people, I think, sometimes are frustrated because, like, wait a second, we changed some of the outliers here, the data. And that's right. Because we can't control some of these things. And so we want to make sure that as we're stress testing portfolios and plans that, you can still withstand these types of environments. And, I think you're right. It's going to be a while. I think everybody was expecting this to peak already. Obviously have not seen that. Maybe we have now. I mean, if we look at core inflation, it's came down just a tad bit or slowed down.
But not enough.
Yeah, not quite enough. So we'll see where that ends up. I don't know, Rich. I mean, I think expectations were 4 or 5% by the end of the year. Do you think we get there?
Heck no.
Yeah.
So especially when you look at the sticky price index, these are prices that tend to change slower, and they're slow to move in one direction or another. But when they move, they don't retrace very easily. And this index is up about 7.6% year over year. And that's very concerning because there's some laggards in there. Owner equivalent rent, there's still some updates to that sticky price index that will increase it higher. That's the stubborn inflation. And how is the Fed looking at that? What kind of measures do they have to take? I mean, how big is the hammer they're going to have to use to get this in line? And frankly, think about this. Yeah, you can do all the demand destruction you want, but there are supply issues that the Fed doesn't tackle, right? We have higher energy prices because we have bonehead policies. We stand in our own way. That's number one. I mean, look at what's going on with ERCOT, right? I mean, the grids are becoming incredibly unstable because of what we depend on now. So that's not looking like it's going to change anytime soon. We have drought. We have Ukraine. When it comes to food prices, going to remain sustainably higher. We're expecting another leg up in food prices. So there are some things that the Fed is absolutely not going to be able to control from an inflationary perspective. And that's what we're going to talk a little bit later about maybe what do you do in your own household and how we adjust to do it in plans, as Danny got me thinking this morning with some of the calls he's having. Now, not a good thing, but another shocking thing was how slow China has become as far as growth. The slowest pace since the country first was hit by the coronavirus outbreak 2 years ago. 0.4 expansion. That's recession. In China, that's recession. The target was 5.5%. It is 0.4.
So I can't remember a time. You remember when China's growth, even at 6 or 7%, was slow?
Uh-huh.
I mean, that's remarkable to see it that low.
Yeah, when we get back, we can continue the discussion here on Financial Fitness Friday. Thanks for joining us. We appreciate it.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Hurricane season is here, and along the Texas Gulf Coast, we know how to prepare. What we don't always know is which way the storm will go, and if a hurricane does come your way, whether your house will flood. Fortunately, you can get flood insurance. Unfortunately, flood insurance rates have skyrocketed. Don't be at risk. Let the specialists at RIA Insurance assess your needs and shop your coverage for the best rates possible. Another service from realinvestmentadvice.com. Click on the insurance tab, realinvestmentadvice.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Could your job still be at risk? A new normal can still include new obstacles. A severance package can be an emotional as well as a financial decision to consider. Wouldn't it be comforting to review the options for you and your family with an objective financial partner? At RIA Advisors, we're here to help. From severance pay, tax timing decisions, to how to maximize unemployment benefits, the RIA team wants to make sure you can do what's best for your family. There's no charge for a consultation, so reach out to RIA Advisors, 855-RIA-PLAN, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to Financial Fitness Friday. I'm Rich Rosso, CFP, Danny Ratliff, CFP's squared. Ooh, CFP squared. Ooh, I like that. Shut up. It's my turn, not yours. I'm going to be like Psycho.
Or
Talking to myself.
or
Mother,
Sybil.
Mother. Well, my mother's going to sound like Janet Yellen. Son, you go in and raise rates. You do it.
There's a psychologist somewhere driving.
Call in. We need you.
Oh, my.
So listen, it's inflation. It's driving me crazy. It's driving us all crazy. That's why we're going to do Inflation Nation Lunch and Learn on August 4th on Thursday. 9-step inflation battle plan. I'm really proud of this, Danny. I think we have some really, I know everybody's doing this, but we have some really good tips because it's time for us to take control in our own households. Just like we did during the pandemic, there are ways or things that we can do here to make this work, right? So we're going to look at, and again, a lot of these tips are from people we work with, clients that have undertaken these activities, and I'm like, wow, very cool. I think this is great. So we are going to make sure to go over this with you. It's a Zoom meeting, 12 p.m. online. Oh. Inflation Nation. I got nothing to say. I'm just sitting here making hay. Oh, this is what I did yesterday, Danny. This is just for you. When do I enter now? Right. There are clouds in West Texas, so my dryer can't run. There's no wind in West Texas, so my ice cream is done. All clouds, no wind in West Texas mean this new deal is a pass. There are clouds in West Texas, and ERCOT, you can kiss my. Ooh, oh, you can't say that. Ooh.
So you said you did this yesterday. Were you like doing this in the mirror at home? Was this
No,
in
I
front
was
of
doing it here on the
dogs?
radio.
What's going on?
I wrote that in my sleep. In my sleep, I'm like, why do I got something going on here? You want to add on to it, Danny? Go ahead. What do you think?
No, I'm good, thank you.
Oh, man. Inflation Nation has taken my hair.
Isn't that the truth?
And Yellen doesn't care.
Oh, my
I
God.
got little to spare.
Wow, look, he did good.
There you go.
If you dare.
He's not going to continue it.
This is like white guys rapping.
It is, really. It's terrible. But inflation is serious, and we have to take it serious. So we want to make sure that you sit in, register now at realinvestmentadvice.com, Thursday, August 4th, 12 p.m. You can have your lunch. I also talked about Mama Clara, Nana Clara, as I call her, that does depression-era meals on YouTube. And I didn't realize how popular her recipes were. She's 98-year-old, little Italian woman, look like my Nana. 7 million views, Danny.
Oh, that's amazing.
So people are changing behaviors when it comes to their habits. How that's going to, result in the numbers, right? We're going to see consumer spending it's still good. Up close to 7% from a year earlier if you look at it. But you are now getting the effects, right? How much households had in cash socked away, right? They had all this stimulus, and now that's all getting drained away. There's still cash there. So spending is still there. But you're now slowly starting to see the demand destruction across the board. How bad does it get? We don't know yet. But
Jamie Dimon says there's 6 to 9 months in cash that consumers have. Brian Monahan, it's a Bank of America CEO. We'll see what he has to say. But he has historically said, hey, they're extremely strong, the consumer is. But I think those numbers have to be skewed as well. They're using averages, not the median. And so you wonder how much that actually, kind of disrupts the overall numbers. Because, look, if inflation is as persistent as it has been, if it continues to go, I don't know if we're not discounting it a tad bit. We've already seen people change habits, and I think that's the biggest thing, Rich. You and I talked to a lot of different people all over the country, and I can tell you there's a pretty pretty resounding sentiment that people are just changing what they're doing. They're not traveling as much. They're making the changes as far as how they spend money. They don't eat out as frequently. I mean, I think these things are all going to be, like we talk about, a self-fulfilling prophecy from a recessionary standpoint.
I do, and I think this malaise is going to last longer. We're used to, when we go through a bear market, we're used to the Fed coming in there and creating this V-shaped recovery, which rarely happens. I don't think that's the case this time. I think investors are going to have to brace for a much longer recovery period. And as corporations go through their earnings recession, these cost-cutting measures that they do, they're going to be looking at these much longer term before they switch again, because they're understanding. And I just see it from the banks putting aside for bad loans. They're seeing that this is going to be much longer than they think. Big Daddy brought it up on YouTube. Big Daddy was one of my favorite restaurants in Brooklyn before it was taken away. Featured in a George Segal movie in 1960.
Really? What kind of restaurant's that?
Oh, hamburgers. It was like Nathan's.
Okay.
Really great. But Bank of America lowered its 2022 target for the S&P by 900 points to 3,600. And citing its forecast for a recession this year. That's the lowest forecast on the street. That seems to be a bank that's actually being reasonable about where they think markets are going. So, Danny, I'm facing all this, right? And we got a lot of numbers coming out today. Empire Manufacturing, retail sales, right? That's going to be big for June. We're going to have to watch all of this. So they still might be pretty good. But this is all this slow deterioration, and the slow deterioration in animal spirits and emotion, that's going to change how things work. And it's also going to change your attitude, I think, towards investing. You're going to have to be a lot more patient. And I think, Danny, this is where our financial plans shine, because we built our plans just for this environment. We said last year, next year is going to be a different type of situation. It is not going to be the same. We have been planning for lower returns in markets since about 2019. And it's really nice to try to provide a realistic assessment to people who are trying to get their financial roadmap together, don't you think?
No, it is. And I think the beautiful thing about that is that we're not having to scramble and say, whoa, man, the plans now all of a sudden they don't work as well when you're not making 7, 8, 9, 10% every year. And I think that's the important aspect about that, is stress testing plans. But, it's interesting right now because we're looking at markets that have already had quite a bit of devastation to them. You look at the S&P's down about 23, NASDAQ's down, 29, give or take.
Oh, yeah. And look at, and then go underneath the surface.
Well, that's
right?
the kicker, right?
Go ahead.
Well, the kicker is you go underneath the surface and you see a lot more destruction of companies and earnings, or not earnings, but price, right? Earnings is coming next. But we see price destruction already, in the sense that we see companies are down 40, 50, 60, 70%. And some of them likely won't be here, but some of them are actually still, we can look and find some value now. So fundamentally, we think there's going to be a lot of opportunity. And this is where we are optimistic. And,
Yes.
I keep telling people, hey, there is some optimism here.
But Danny,
because,
if you think about it this way, if you're a value investor,
yeah,
I can't remember who said, I think it was Paul McCulley years ago. He says, we are not trained. We're not positioned to be value investors. We want to put a tree in the ground and have the tree grow bigger. That works for momentum investing. Now we're asking investors to put a seed in the ground and wait for it to grow.
correct.
You're going to have to go back to looking at company fundamentals and a slower path of growth. Listen, there are always going to be companies that shoot the lights out. Danny said there's going to be a lot of opportunities that we can see a quick rebound in some of these positions, say, as the Fed starts cutting rates, probably by the end of next year, right? The point is, though, without the Fed really coming in there with quantitative easing and doing whatever they can to push money into the system, without that leadership, you just don't have the same momentum in stocks that you did before. And you're going to have to train yourself to understand and really look at yourself in the mirror and say, am I really a stock investor? Do I belong in stocks? And Danny, you brought this up to me as you brought up our portfolios in many cases are down lower than maybe half the market, less than half the market down. And the 60-40 allocation is down to what, 16?
16, 17%.
One of the worst performances I've really ever seen. And we're not down anywhere near that. Okay, we're down maybe half that. So the point is, if you are going to invest in stocks, you're going to take losses. It's inevitable. We've stemmed the bleeding, so it doesn't interfere with your plan. But there's nothing else we could do. All the people that want to go all to cash and come back, listen, if you want to do that, listen, I love Gary Kaufbaum. I watch him. I've read his books. He does that. He's a technical trader. I understand. We don't suggest that. We will work the risk management and then move out of stocks more than if we need to. We're going to stick with certain positions that we think will work through a recessionary cycle, even though they may not be working now. That's why we have rules. That's why we look at it unemotionally. And some really people, don't you think, Danny, have to really look at themselves and say, maybe I'm just not right for this next phase of investing. I'm just not equipped to deal with it emotionally, and I can't sleep at night.
Well, that's the thing. We've had such a long period of time where we've been pretty much a bull market. I mean, think about the years that we've been down. It's been very little outside of the pandemic. Now, pandemic was a completely different story, but if you strip that out and you look at 2018, you look at 2015, we were down. Markets were, but not a whole lot. And so I think that
and
now
then they recovered quicker, right? Because we had the Fed come in again and do their thing.
Correct. And I think they will again, but it's going to look much different to your point because now we actually really do have inflation. We have a problem.
Right.
We're trying to get it back, or they're trying to get it back to 2%. They tried to get it to 2%. We had to go through a pandemic, a supply chain disruption, give everybody a whole lot of money. Every one of these things, which was very inflationary, by the way, and then tell people not to pay their bills. And we created this inflation, right? I mean, now there's other aspects, geopolitical risk, things of that nature that certainly have a hand at play here. But I think the big thing here, Rich, is that thinking about, okay, well, if we're going to go into a recession, does that mean that the market's going to go down another 20, 30%? No. A lot of times the market's leading this. And so that just means we may trade sideways for a while. Now, we may have that exogenous event like Lance talks about.
Right.
If something comes and sideswipes
financial
us.
instability of some kind,
Correct.
Especially with the strong dollar. We don't know what's going to happen across the globe.
That's right.
I mean, the dollar has been shooting the lights out. Hey, when we get back, we're going to be talking about the Rise and Shine Act bill and what it means for you in retirement savings here on Financial Fitness Friday. We'll be right back.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Elon Musk recently took a large shareholder position in Twitter. He made some comments that Twitter should be the town square where everybody can freely have their opinions heard without censorship, etc.
The Real Investment Show podcast. Same show, your schedule.
The staff at Twitter are apparently so triggered, they were even stressed on their monthly day off for a day of rest.
At realinvestmentadvice.com.
It's called the weekend, folks.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
Have market gyrations caused you to lose sleep? If so, it's because you have more risk in your portfolio than you realize. It's time to reevaluate your long-term investing strategy with RIA Advisors. Our disciplined approach can help eliminate unnecessary risk. If you think it's time to work with an advisor who puts your interests first, it's time for Real Investment Advice. RIAadvisors.com.
You're listening to The Real Investment Show.
We want to get to this Rise and Shine Act bill, but I want to talk about this first because there's never been really a better time to have some money in different types of cash vehicles. My daughter called me last night, Danny, and she goes, Dad, you talk about these online savings accounts. What should I do? I have $20,000 in my emergency savings. And I'm like, okay, well, here's what we need to do. You need to go to Ally Bank or Marcus Bank and open an account. Real simple. Here's what you do. Move it out of your brick and mortar bank. And she goes, okay, I'm going to do that. I'll let you know how it goes. So I just got an email last night from one of my online banks and said, hey, we're raising your rate again. So you have online banks. I will tell you, if you look at 3 6-month treasury bills, right, you're getting about 2.6, 2.7 on an annualized basis. You've got room here. You don't have cash forever. Right? And it doesn't beat inflation. I get all these talks. But I wrote an article in January that I was reading yesterday, rereading it again, that talked about how cash is going to be king this year. And it turned out to be absolutely the case. So if I want to park my money, I've never had better choices. Also, bond yields. Right? Able to buy individual bonds, individual treasuries. If we're correct, and Lance is correct, that during a recession, a global and fear rises, I don't think we have enough fear out there yet. You will see more money coming into us, yields drop off eventually in treasuries because it's always return of my money versus return on my money. But also, and Roger Ibbotson came up with this study years ago that depending on how bond yields work, that you can actually use fixed annuities in your portfolio plan versus individual bonds. And we've seen an incredible demand for fixed annuities. It seems like the annuity moniker of it's so bad is really dropping off. And I think more people are going to have to depend on creating their own pension because they're not going to get the tailwind in variable assets like stocks and bonds. I also think if you are investing in stocks and bonds, you're going to look at you're going to have to find advisors that are going to look at flows among sectors, but you're also going to have to look at advisors who understand individual stocks. And I will tell you, it's not as much as you think. Most advisors are not going to really know how to do that because they've been born under this momentum investing theme. And now cycles are going to change. They're going to need to change too. But talk a little about you don't want to be all or none with annuities. Absolutely. But what do you think, Danny, about that? And Gordon brought that up on our YouTube channel.
Well, I think, that's a really good point. And so the annuities, we've seen a major inflow into them. And I think a lot of it, Rich, is emotional because we're getting sold this story on, hey, look, we can protect assets, you can still participate, but you have to be cautious, right? This is not something that I'd put everything into, especially you talk about a fixed indexed annuity that would be, say, hey, we're going to give you downside protection, but we're only going to give you so much of the upside. And you have to think about what that means long-term for you.
Unless you want to do, instead of like a pure interest rate, you're doing, maybe you're linked to an index.
You still have some participation, but it's only some, right?
That's right.
The other caveat would be is, let's look at, a MIGA, multi-year guarantee annuity. And these are really popular because we're finally seeing rates that are actually, they're a little bit better than what they've been. I can think back, I want to say, Rich, it was like 04, 05. We were doing 6 and 7% fixed annuities.
Yep.
And people were just like, oh my gosh, we can get in the market and do so much better. And then when the market tanked and rates just dropped, they were so thankful when those things matured. They're like, oh my goodness, they're in tears. What are we going to do? And I don't know if this is going to be that exact same environment because obviously rates are not that high at the moment. And I'm not sure they're going to get there. But I want to be, say, hey, be cautious with these types of things. Mm-hmm. Look, they're a great tool. They can be used when they're used properly. However, think about
they do get
this.
sold to you. And that's the problem.
That's right.
They don't get planned. They get sold. And that's why people have a bad feeling with them because, again, if I'm just being sold, like same thing like long-term care insurance, I get sold this, all the bells and whistles and all that, and you may not need it.
You get oversold.
Oversold.
The emotional aspect. And, the same thing, I think I told you a couple months ago, I was driving home from somewhere, there's a weekend, listening to a radio show, and the guy was like, hey, you know what, just put all your money in one of these annuities. I mean, it's great. And I was like, wait a second, hold on now. You just can't blanket tell people that. And so you have to be really cautious when it comes to this. And that's why, like you said, it has to be planned, not sold. And think about this. If you're going to do something like this, which I think it can fit for a lot of different people, not everyone, but you also want to make sure that you maintain that flexibility because we keep talking about this opportunity and the optimism that we share for the future. If you put everything in something like this, there's pretty stringent structures as far as how you get out of that.
Because there's surrender charges.
That's right.
And you're going to be locked. Yeah, you may be able to take maybe about 10% a year out, but if you're going to lock, this is cementing your money in. So you better be saying to yourself, I'm willing to do that with a portion of my money. Unlike a bond, where if I want to sell it and maybe even sell it at a profit, right, if yields drop off, I can get out with no penalty. It's very different with an annuity structure. So you got to be careful. And you got to be making sure that how do these fit, if they fit at all, into my portfolio plan. But cash options right now, again, I was looking through treasury bills yesterday for where I think toward the end of the year, things are going to be rough. I did place some clients' money into 3 to 6 month treasury bills and just say, okay, it's better than sitting in money market. But even Fidelity money market's about 1%, Danny. I'm not saying these are great yields. What I'm saying is the doors are opening for more fixed income options while you wait for some of the valuations to work out and see where we're going. That doesn't mean you get out of the market to go all into that, but you definitely have more cash options than you did in the past. And I think that's very good.
Well, cash isn't so bad now either. I mean, it's look, we're getting 1.2 in money markets. Mm-hmm. That's something we haven't seen in quite some time. Even at the beginning of this year, I mean, they're basically still paying nothing. But you got to be cautious. I had a client a couple weeks ago send me an email and said, hey, got this from an old advisor. What do you think? And I thought, wow, this is actually It was kind of a blanket sales pitch. But the way it was written kind of rubbed me the wrong way just a little bit. And what I mean by that is, it was, if you didn't know what it meant, you could be, for the average person who doesn't deal with these types of things on a day-to-day basis, you say, oh, wow, this is great. And just subtle little things like, however, if the cap ever drops below a certain amount, we can walk away with the annuity contract with no consequence. Okay, great. Now, has the cap ever dropped below this? No. Will the company ever do that? No. How long is the contract for? 15 years. Don't worry about it, though. If it ever drops, we're going to let you out. I mean, little things like that. And I don't know if this contract...
I know, but it's very sneaky.
Yeah.
Because it sounds... I mean, again, it's word salad, and it works.
There are no fees associated with it. Well, listen, you may not be paying for them out on top, or see them, but there are fees associated with these things one way or another. That's why you're being capped as far as how much you can make. Just be cautious with verbiage and how it's put out there. Rich and I, as you can probably tell, have a very, some disdain towards some of the verbiage or how these things are sold. And really because we believe that it needs to not be emotional. It needs to be logical. It needs to make sense. It needs to be,
But we have to be the skeptical ones, because I get the same thing, because what's going to happen now is, because people are so distressed over the market and inflation, they're going to get seduced by yield. Oh, look at this. It's going to give you 9%, 10%. And I've seen this happen over and over again. People are going to fall for these things and lose their principal. Bottom line. Okay? So you have to do thorough investigation, or at least give it to a second objective set of eyes that'll say, oh, you know what? Yeah, it worked. I never thought of it. Then, right? You get the Floyd approval, or, you get the, oh, wait a minute. No. Let me tell you what this is. And so you better be making sure that when you see big yields, that you don't get seduced, and you do have someone look at it for you. It's very important.
We'll talk about all the sophisticated products that Wall Street's been pushing. Think about the SPACs right now, Rich, that are actually unwinding. So what has that done? And so
these have imploded.
You're giving investors money back, but at what? What fee did you collect all along the way to get it? I don't know. I mean,
and now we're going to have to see, because now there are anti-ESG ETFs. Not opposed to those, because ESG is a ripoff for the most part.
Why didn't we think of that?
I don't know. Why didn't we ever know that ESG was a ripoff? We're being facetious because Lance has been writing about it forever. We have to look at what kind of new products is Wall Street going to create based on this cycle. It's going to be very interesting to see, Danny. They're going to double down on the climate change issue. That we know. They may clean up some of the way they sell it, but that's coming. But I just wonder what else they're going to be looking to create, because they are master marketers. I bow to them all the time. Like, oh, what the heck is that? So we know it's coming, because they know what you want, and they don't care about climate. They don't care about anything else. They just care about making money. Yes, that's all that it is.
Not the green you're thinking about.
Where yeah, they're thinking about the green, all right. So we have to stand between you and Wall Street in many ways to make sure you're making the right decisions and that it makes sense. So there's all kinds of new bills coming out. This one is the Rise and Shine bill. And this is part of what we call the Emergency Savings Act, which could add optional savings funds to your defined contribution plans, right? Where workers would be able to use after-tax Roth-style contributions to build up to $2,500 in account value. We'll go through this when we get back, where this makes sense and where this is sort of silly, just based on how the whole 401k industry has run. But we'll discuss that when we return. Final segment coming up. Financial Fitness Friday. Stay tuned.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Hurricane season is here, and along the Texas Gulf Coast, we know how to prepare. What we don't always know is which way the storm will go, and if a hurricane does come your way, whether your house will flood. Fortunately, you can get flood insurance. Unfortunately, flood insurance rates have skyrocketed. Don't be at risk. Let the specialists at RIA Insurance assess your needs and shop your coverage for the best rates possible. Another service from realinvestmentadvice.com. Click on the insurance tab, realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN at realinvestmentadvice.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Welcome back to our last segment. I think I know what Danny's going to be doing this weekend. He's going to be eating ice cream.
Absolutely. Hey, it's National Ice Cream Month. Bluebell Ice Cream. If you guys from Texas don't know what it is, have to check it out. Phenomenal.
I wish I were a big fan. What?
And you're a big fan of everything like Brenham area. What are you talking about?
All things Epicurean?
I don't think Bluebell. I mean, I love everything Texas.
Oh, this is the Yankee coming out of him now. Hold on.
Oh, come on. I'm a fan of the Beaver. I mean, Buc-ee's. So I'm a fan of everything Texas, but Bluebell's okay. I like DQ. I'm a DQ guy. But there are some interesting new flavors like that are going to make
DQ?
Yeah, I don't know.
That's like
Bluebell.
comparing Wisconsin cheese to Cheese Whiz.
I like both. Cheese Whiz. I like.
What ice cream do you prefer?
I really don't eat ice cream anymore. But
that's right. Lactose intolerant. That's right.
No, I'm just intolerant.
That's true. Yeah, but they are coming out with oatmeal cream pie.
What?
That I love those little Debbie oatmeal cream pies.
And
you all ruined my life when you started putting calories on crap. Stop it. Go ahead.
And then strawberry lemonade ice cream. So strawberry.
See, that was the one, but
ice
then you
cream.
Okay.
Lemonade sherbet.
Okay.
Lemon flavored flakes. Now, I'm not probably the biggest fan of that, nor do I eat a lot of ice cream. But it is my littlest. It's his birthday. Happy birthday, Joseph. He is 6 today.
Really?
So I'm sure there's going to be
Joseph.
ice cream in our future.
Oatmeal cream.
Need to get him in here and have him cut some liners for the show.
Oh, man. The stuff he would say, I'm not sure we could air.
You know what? Out of the mouth of babes, we really need more of that in the commercial.
Isn't that the truth?
You know what? Get the kids in and go, well, what do you think about money? What's your first thought about money, Joseph? Daddy, don't let me have any. That's good. Oh, it's good. You know, we should do that. But that's it? Only 2 new flavors?
That's the only 2 new for this month. Now, I'm sure they got something cooking.
The best flavor Bluebell ever came out with, the special flavors that they would do in the summertime, peanut butter ice cream.
Just peanut butter.
Peanut butter ice cream, yeah.
That's it.
It's all you needed.
But it doesn't have the consistency of peanut butter.
No, but it's cold and it's...
So is it smooth or crunchy?
Smooth.
Now, that would be cool to make it crunchy, too.
Yeah. Well, we could throw some chocolate chips in there, too.
Listen, I'm not
You know
gonna,
what? Hey, we could be in the R&D department. It's okay.
We should. You have a crank?
I
No?
try to get into the Bluebell tour, but it doesn't run as much as it used to.
Oh, well, it's worth booking.
Is it?
Yeah.
It is. It's
It's
pretty
the
cool.
pandemic. I don't know.
Free samples at the end.
Okay, that's all.
Now, I can
Brent
tell you,
starts from the end and works his way back.
now all the issues that went down, we actually had a private tour of the facility before all the listeria and everything
Right.
that happened.
Yeah.
And the coolest thing is to see these guys.
He did it.
No, but talk about such a good family. They knew every person's name. Oh, Brent, your son is Adam. You guys do this. You're the best soccer player in Washington County. I
Yeah.
mean, just everything about every employee there. I mean, it was pretty cool.
That's kind of creepy.
No, it's awesome. Just shows, well, I mean, you get a close-knit community that is very involved. I mean, for people to know that, I mean, how a business, people, you want people to know people, right?
Book a
And-
private tour, get an in-depth background check.
Now I'm going to get back.
no.
I'm going to get backlash
Not
for
like
this.
that. Just saying, hey, how's it going, Brent? You
Yeah.
got the factory guy over here sweeping the floor.
Yeah.
And you know his name.
Yeah.
Yeah.
And there's 100 people in there.
Yeah. Like a Cheers episode, only with ice cream.
Exactly.
Everybody
But
knows your
better.
name.
I don't like beer ice cream.
I'm sure it's out there.
Now I will tell you, I'm going to get backlash for this. I'm not a fan of Whataburger. Why? Because Chicago bought them out. I don't like the fact that they sold to a hedge fund.
May I offer a constructive criticism
Yeah.
of
Is it?
Whataburger?
Yeah.
Presentation has fallen off
Really?
significantly. Yes.
Wow.
And I'll tell you what, the wait time. Now, we don't eat fast food. Very, very seldom. I mean, I'm talking like once, twice a year. And you got to be on a trip.
Yes.
And
that's
we left somewhere. My wife said, Michelle said, hey, we need to stop, get the kids something real quick. Let's go get a taquito from Whataburger. And then she's like, nope, I'm not waiting in that line. I was like, what are you talking about the line? She's like, it's so slow. Well, I think she's been jaded because, you run through the Chick-fil-A line every now and again. That'll
That's
change
a
your life,
well-oiled
right?
machine right there. Yeah.
Yeah.
So really, the presentation, it's food. You mean what's like? You know what? Because they start working around the edges, but something's different, right?
It's like, when's the last time you saw a hamburger come out looking like what's pasted on the flyers inside the restaurant? And Whataburger, it ain't happening right now.
That's a shame, and that's why a lot of companies won't go public. Like Chick-fil-A said, we will never go public, right? I also think that even Buc-ee's probably could, and they won't, because something's going to suffer. That beaver's going to look mangy if he goes public, right? I mean, they're going to have to shave him, cut his hair back, put
Start
his hair.
growing quills.
Yeah, I mean, it's just different. And now you see, it's not publicly traded,
Yeah.
but this organization buys it, and right away, what they want to do is they want to cut corners. And as
And it
soon as that
hurts.
happens,
It hurts.
It
I
hurts.
mean,
It
I'm
does
I'm
hurt.
an app-carrying Whataburger fan from way back, but
the
still.
brand is so incredibly strong,
Yeah.
right? There's such a brand loyalty, and you're going to blow it. And they don't care because you know what? There's going to be some people still going to tolerate it to some degree, but you're going to lose market share if you continue to keep doing what you're doing. And
Well, the
that's a
problem
shame.
is that many of these companies get sold, right? So what they're trying to do is they'll come in and they're just trying to make it more efficient,
right?
cost efficient, which isn't better for you and I, and then turn around and flip it. And you know what? That
Like
always
a burger?
flip a burger. Exactly. Flip the whole burger, though. But that's always interesting. When you see these companies, they buy a company for a reason. And then they come in and they want to do all these cost-saving measures, which some of them may be warranted. But, I mean, they slash everything. They change the way they do business, and they completely lose sight of why they bought the company.
Well, the goals become different.
Listen, there's a heart and soul to Texas that doesn't exist in a lot of other states. And I don't think you can mess with the food and mess with it too much. And if you're from an outsider from up north and you're going to buy the company, you're not going to look at it that way. If a Texas company bought them, I might think they'd probably understand it better.
Preserve.
Yes,
Yeah.
preserve some of it. So now I'm hungry. Dang it.
I could see the orange and white stripes down the road here, from out the window.
I don't do the fast food anymore. I'd love to, but sometimes I just want to get a shake from Chick-fil-A.
I can start the day with some Bluebell.
Yeah.
Oh, it's got milk and eggs in it. It's healthy.
Yeah, of course.
Oh my gosh. I would have loved Brent when I was a kid because, I was so husky. I loved my food. Uncle Brent's coming over and we're going to eat.
If we'd have gone to school together, you and I,
I'd be dead from diabetes.
yeah, both of us would be by now.
Yeah.
You wouldn't be on the Clara diet?
Yes, and I watched Nana Clara last night make a pizza.
Really?
And it was very good. She goes, this last piece is going to last you all week.
Well, that means if you only eat one slice a day, but
who does that?
Yeah.
Cut the slices into quarters, then you cut them again, and then you cut them again, and then when you think you're done, you cut them again.
I don't think I could eat that many pieces of pizza.
You get exhausted. That's her point.
You want 8 slices or 6? Just 6. I can't eat 8.
We don't use crust. We use cardboard. Using old Amazon boxes as crust. It works very well. And then, because you can't tell with all the sauce and all that, and you put it in there and you bake it. It's so good. Ooh, I love it. So, there's some Rise and Shine Act bill. It's so funny, Danny. We talk about the savings hierarchy, right? Before you put money in a 401k, you better have an emergency reserve established. But we're just going to all lump it all together. At least they're sort of thinking in this act of the same thing, right? Because we know that workers and retirees are chronically undersaved, especially for emergencies, right? We all know the stat, 4 in 10 Americans haven't even saved enough to cover, fewer than 4 in 10 have saved enough to cover even $1,000 of unexpected expense, right? So I see where they're going with this. But is there going to be education around this? About where do you have an emergency reserve? And I don't like using Roth in this mix. If you own a Roth account and you're funding it with after-tax dollars, I don't think it should be a checking account. And that's where even a lot of advisors say, well, you could take your after-tax contributions out of your Roth at any time. Why am I doing this? This, to me, is where mental accounting actually works. You actually set it apart, put your emergency reserve in an online savings account, and separate it from your long-term savings. I don't like putting it together, Danny, like this.
No, I don't, because we talk about the leakage of all these aspects that you can pull from here, pull from there. I like that they're giving you the avenue to put it funds
at least
aside
they're looking
like that.
at it. I agree with you.
But it's the problem on the back end where they say, well, but if you really need it, go ahead and take out. And that's the problem, right? And I think that that's where we need to see a major shift here in America, is that we need to get much more conscious with how we're putting funds aside, where we put them to work, and understand, like you mentioned, the hierarchy of how to save. And it's going to be a little bit different for everybody, depending on debt, depending on goals and objectives. But, one of the first things I think we need to do, which, that's the opposite of what we're taught. We're taught, hey, get that 401k, max that out. And that's great. But do you have that savings account with the emergencies reserves? Do you have the financial vulnerability cushion? And look, I at least get the foundation, which is that emergency reserve. Get that done first. Now, I'm all for doing it in tandem, where if you do, okay, we're going to put X amount over here in the emergency fund, but we're going to at least get the match from the company in the 401k.
Right.
To utilize that, or the HSA for that matter, which I think is just as beneficial, if not more.
At least we're starting to understand that emergency savings, or what we call a financial vulnerability cushion, which is a year's worth of living expenses, is something that should be considered. I don't like it as this emergency savings sidecar to a defined contribution plan. I think you're just giving the message that I could take it from here, and then when that's done, I could take it from here. You gotta build a better fence around these accounts. More mental accounting works here. All right, Lance is back on, he'll be crabby, absolutely, but he'll be back on Monday. The famous money curmudgeon will be back. And remember, sign up for Inflation Nation Thursday, August 4th. And we'll all see you next week. Hope you have a good weekend. Try to stay cool. I know it's tough. Bluebell Ice Cream. That'll do it. See ya.
If I had a little money, it's a rich man's world. It's a rich man's world.